Okay, in this video, I'm going to be live managing a trade that's running at about 17R right now. You can see my unrealized profit here at $18,262, which is, yeah, we'll see. I want to try not to lose it, try to lock in, but I'm a professional gambler and I'm here to gamble and I'm here to make more ultimately and make the most that I can. So that's the approach that I'm taking, and we're going to analyze and look at and try to manage this trade. Now, just a quick recap for how we got here on the low time frame, and I'm going to go into the high time frame and work my way down. But the trigger for the trade was taking the range highs and falling back underneath. And what I did was I risked 0.5%, which for me is $1,100. And then when it went about $1,000 in profit, I increased my position and added on, and I did that twice. So my risk was never more than, I think at one point it was $1,300, but for, well, the second add-on was on, but most of the time it was $1,100 for, if we were to go down to $20,000, which is not that far away, we came from 15 to 23, a retracement to $20,000 would be a $67,000 win. So that would be about a 60R trade, which I have done before. Now, it's only possible to do this, and there's more to it. We'll talk about the targets, but the trigger was a swing failure of the highs of the range. Also, just there was a lot of other things that I was seeing, but that's the main thing. Like, this is a valid trade, you add on to it, and it just happened to work out particularly well. I was extremely close to being stopped out. This third add-on was horrible. The timing of it was horrible, and I was underwater for a long time. I put my stop just above this high, and you can see we put in an equal high. The trade was within a couple dollars of stopping me out. This trend line protected me. This high protected me. It was a mistake though, and I should have added on later. But something to think about is as my stop was right here and price was right under it. It's tempting to just say I'm gonna lose. I'm gonna take the loss. But at this point, I'm like $1,000 underwater, and my stop loss is $1,100. At this point, my risk is only $100, right? And my reward is still the $60,000, $70,000. So at this moment right here, let me show you. This moment right here, the dynamic risk reward of this trade is 600 to 1. So 600 to 1 to break even, you need about a 0.15% odds of this trade working out. And what were the odds of this trade working out greater than 0.15% when price was right here? I think so, because we shouldn't, if we're in a downtrend, we shouldn't take a higher high. And this, at the time, this line should have held, and it did hold. We did reject. And so the point there is to not close out as price moves against you. It doesn't really make sense to do that. Don't do it. As price moves against you, there's times to do it if like you're just being totally invalidated, but if your stop loss is your invalidation, price is coming towards your invalidation, your risk reward has never been higher. Now, by contrast, right now, what is my risk right now is not very good in terms of I have right now $19,000, almost $20,000 of open profit, right? My stop's still up here at break even, and I'm aiming first target down here. I'm actually going to wait for strength to long here. Second target down here. So if this is my first target and I'm going for an extra 10 grand or 7 grand or something like that, I'm risking 20 to make 10. It's not really very good. So for one thing, I need to put my stop. I need to advance my stop now above right up here. That's important. This should be a rejection. This should be This should be a rejection zone. If we go higher, then um, I should get out. So let's at least lock in something. I would say I'll start with this high. Will be my stop at 23, 23, 24. So let's go do that. Advance my stop loss to 23,000. What did I say? 324. 324. So worst case, I'll make 7,500. Now, one of the important concepts I did with this with the FTX dump too, and this is what I should have done on the rally from the lows. If I had been able to hold my first position, I should have added on several times, and I would have made life-changing money just on one trade. But there's more opportunities. Now, you have to wait for the right moment and add on. But I was able to do this with small risk, right? 20R, risk 1,000, make 20,000, make 30,000, make 50,000. I did that with FTX. And what I'm finding personally about me is I'm able to trade this way and trade a lot better when I take small risk. When I risk 2%, it's not as simple for me to trade this way. Okay, we're going lower now. It's not as simple for me to trade this way. Okay, interesting. If we wick above it, it's a possible sign of strength, but we're gonna go into the high time frame, and I took a couple hedge longs. We'll get back to that. Point is, when I'm risking, what to me is pretty small, and my gain is pretty small. Like I'm accustomed at this point to 20, 30, 40, $50,000 wins, $100,000 win. I'm not excited about making $2,000. And it's not that $2,000 isn't a lot of money to me. It's that with how much I risk and how big the losing streaks can be and how long they can be. And like I want a big win. I want to be rewarded. So a problem is if I'm trading a 2% position, I don't need to add on. I don't need really to run very far for me to feel like I made a big win. Interesting price action right now. So I tend to just not pyramid well. Care more about losing, and I don't let the trade run as long. So it's something I need to work on psychologically. And yeah, I have work to do. That would have been an interesting place to get long locally, but I'm not that interested in longs right now. Okay, now that some of those ideas are out of the way, let's go look at why we're even targeting so low. So the first thing is we're going to start on higher time frames and work our way down. See what we see. So we're on the 1 year here. We still have this hotspot at 25.6. Everyone is looking at this, and I expect that we go up there, but I don't know that we go there right away. I think it's quite likely we go lower first. We don't have to, but I think it's quite likely and possible we go lower first. So on the 6 month, we took the hottest spot on the chart. We cut up above it. We were leaving some behind, but we're starting to pull back. There's nothing really immediately near us for long liquidations that have accumulated over the last 6 months, except under these lows way down here. I don't think, to me, it's not convincing that we should go down there, but it is a possibility. I'm definitely not holding for. I'm not holding for 15,000. We had a market structure shift. It doesn't make sense. It still looks like 25,000 is on the table. And if we zoom back out again to the 1 year, not just 25, but I'm eyeing this area over 50,000 and thinking, okay, I think it's possible that's going to be a pull on liquidity. But the reality is I'm trading on shorter time frames. So, as far as the 1 month goes, we've left liquidity overhead, but we dumped aggressively away from it. And locally above us, there's not a lot of shorts to squeeze out now. And we're very close to this hotspot at 22. And then from there, this hotspot at 28. So these are the targets that I'm interested in. There's a hotspot at 18.5. The conservative thing would be if we break to 22,250, which is not that far away, to just exit. But there's reasons that might not be the best. And yeah, this guy had an insane Matic order. I want to close this because it's distracting me. Well, I do expect we'll come back to this 25.2. Like, it's hard to squeeze up to it now, and much more likely that we squeeze down. And if we go to lower time frames, it's even more striking. Of course, we could reverse here, but I kind of want to see stability and strength come in. And I mean, if we look at past bottom breakouts, we don't always come back and sweep the range lows. But I think also price action evolves, and liquidity trading and liquidity concepts were not as big 4 years ago. A lot of people have access to these charts and will wait for these levels or try to drive price down to these levels. So the conservative target would be just under the range lows. A greedy target would be under the old range lows. And then an extremely greedy target would be somewhat lower. And by the way, these don't invalidate a bullish thesis on the year. Like, we ran from 15 to 23, pulling back to 22 or 20 or even 18. It's not particularly bearish. Okay, now let's go to the 7-day. The 7-day to me is screaming to hold on to the short and to wait on longs. It is very unlikely we do not at least wick down here and just stop at everyone. And locally, there's not that much above the range highs now, and also very little above this dump. It happened so aggressively. So much of it was not shorts opening, but was longs getting squozen out. So my current idea is, depending on what happens at 22.2, I may go long, I may close my short. I may try to hold my short till lower though. Just go for the absolute grand slam. But yeah, I mean, it could reverse. Oh yeah, another thing I want to mention is hedging, which I did, but we're gonna look at hedges. Yeah, over the past 12 hours, there were shorts above the highs of the range that have come in, especially the last one. So that's something I do need to consider, is the possibility that of um where my stop is now is somewhat of a liquidity target, where price could easily do this, where we take this and reject. But this would be, that to me would become an interesting short in here if price were to do that. But everything to me is screaming to hang on for at least this area and then evaluate in here. We're very close, and there's a good chance we get there today. There's a couple other things to look at that I want to look at though. One of those things, I took several hedge longs, which didn't work, and I kind of hate hedging because they weren't valid trades. Like to me, there's I really do not want a long in front of 22,250, but I thought like, well, I don't want to close my short, so I had a long in here, got stopped out there, and then I tried another long this morning where um yeah, inside here. Both stopped out, and one of them I risked 2,000, one of my risked 1,000. So I don't really love that. Um, I would rather have those $3,000 in my pocket and just be like, I have conviction, I have a belief that we're going here, and there's a chance we're going down here. And one problem I have though is FOMC on Wednesday could cause a lot of volatility. Wherever my stop is, it could be hunted. Depending on what happens, that's on Wednesday. If it's Tuesday night and price is down in here, I might be happy to just secure the bag and get out a drawdown, take my money and run. But I may also be interested in longs and aim for this greedy target down here. Just break even my stop and say, well, either it works or it doesn't. So, I mean, locally, there's a couple triggers for longs though. Like, it wasn't too bad up there. If we see some strength come in, then it might make sense. I would want to see like a lot of strength come in though. Like actually getting stopped out would be a long trigger on retracement. So I don't think I think I'm just gonna wait. Let's look at some higher time frame stuff, macro. This kind of surprised me where I was like, you know what? I think I'm gonna come in Monday maybe and just buy equities and put my stop loss in the trend line. And instead, I didn't do that. Instead, I put on one of the biggest short positions I've ever put on. Look, it's a $450,000 short. I think my FTX short was a similar size. Um, and instead, it comes immediately dumps. The actual indices themselves gap down, right? And retesting the trend line right now. Definitely sort of surprised me in the bearishness of the market. Um, so S&P 500 looks okay. NASDAQ looks okay. The Russell to me doesn't. So if you look, like, we took this high, we lost it. We took this high, we lost it. I feel like the structure is shifting on this 4-hour timeline. Like, this could just be a pullback and we go higher. I guess S&P 500 doesn't look quite as good because we're currently under this high here. So to me, if we take this low, that would be concerning for a bearish case. It's like, why are we taking lows now? We were supposed to go to higher highs. But that's something to pay attention to. It's dumping right now. It's been dumping. It is dumping. I think part of it is just in knowing that rates are going up this week. Um, they they people want to de-risk possibly from their rally. Also noting the dollar is on its third straight green day, which has happened a couple times during this downtrend. We're seeing signs of possibly a base being built, and I'm just interested to see what happens when we come into these resistance trend lines, if any of them break, or if we get rejected the first time. Um, we bounced off this trend line so many times as support, so I'm interested to see what happens here. Okay, now let's go to the crypto coins on a higher time frame. So I will say, if ETH rejects here, which it seems to be doing, and then and we come down lower, it could make a good breakout long as we take this high and continue. So that's something I would be interested in. I mentioned I only really want to trade breakdowns and breakouts on higher time frames. They don't really work on lower time frames very well. Technically, I traded breakdowns yesterday because both of my ads were breakdowns, but I would consider that had higher time frame context for adding there. Um, so it doesn't surprise me so much to see ETH doing this. ETH has shown weakness, has been showing weakness relative to Bitcoin and in general. Like we have a breakout that failed to hold here, and then a move that failed to break out. The odds of these lows getting swept, it doesn't have to happen, but it's a lot higher. It looks like a possible trend reversal. The question is, if we dump, where will we dump to? I think it's very unlikely we take these lows, although it's possible. It doesn't always take news to do that. I don't know. Like, I guess I don't need to pick a bottom. These, like, this top has taken a while to develop. This one took a while to develop. This bottom took a while to develop. This bottom took a while to develop. This top took a while to develop. There's there is time. Things happen slowly. Okay, now let's go to Bitcoin. Bitcoin, obviously after we broke out of these trend lines, which I'm gonna take off the chart now, there aren't really any major important high time frame trend lines to break out of. We've broken out all of them. The most interesting would actually be to the downside now. It doesn't mean that we go down. I'm not saying that we go down, but I'm saying that we already broke all these trend lines from the highs. So these should act as support unless they break, then they should nuke. Um, let's analyze on the daily chart before we go to lower time frames. So we have a bearish engulfing on the daily on most assets, which after a strong trend is generally not what you want to see. Failed breakout into bearish engulfing. That happened here. Happened here. It happened here. Trying to. It happened at the all-time high. Failed breakout. Bearish engulfing. We ended up pushing up higher. Here was one, and we went lower. I mean, here's one where we pulled back and we were able to continue up. Failed breakout, bearish engulfing. We went higher, but I don't think it's a great sign for continuation. It doesn't mean that we go to new lows, but here's an example. Failed breakout, bearish engulfing. We did poke up higher later, but we went quite low. Yeah. Now, during this rally, We never swept any range lows. We sort of did actually, because this took everything. This did sweep the range lows right here. So what do we have? Failed breakout, huge bearish candle, maybe something like this. I don't know. I do think it makes sense to try longs under the first consolidation. The idea that we come back and take the other consolidation seems somewhat more far-fetched, although it's double the risk reward. And the odds that we go there in a straight line seem sort of unlikely, and I could maybe try to get into the trade in other ways. But the odds of not taking this seem quite low, and the odds of a trend reversal seem quite high, actually. So I'm not sure that aiming for here is that greedy. Look at this. So if we look at the very bottom of the move here to the top, and we put on our retracement levels, in terms of a bullish context, like we could go to under 20,000 and it's not really an invalidation of the bearish case at all. We could even retest this high, come down here. Sorry, it doesn't invalidate the bullish case. So I think it's naive to think that we can't have a significant retracement. Obviously, we could just continue up. We could just go take this high. We could have a huge green day come in like this. I don't know what will happen. Don't pretend to know what will happen. I'm a professional gambler. I'm thinking probabilistically in terms of what might happen and how I want to position myself. Now, from here, we're going to go back to the lower time frames and think about what I might want to do. So let's throw on our, actually first, what I want to do, I want to see if there's any relevant trend lines, but I think we broke most of them. I mean, I could just go from this wick here. Say, okay, is now a trend line. Yeah, anything that we had before it got broken. So that means we're in a downtrend, locally at least. We appear to be. So let us take a look here at some of these downtrend lines. So any of these breaking makes it a little bit more interesting of maybe we reclaim. Like if we can bounce on this line and we take some of these, then that would be a possible more bullish case. Now let's throw on. So this 22,500 area, I think it's quite interesting for longs here. And it'd be quite interesting for longs down here, but I'm trying to get away from just limiting order and gaps. And I would rather wait, see a move, see strength come in, and then limit order or market order. So I'm just going to wait to see what happens in that area. Now, I need to consider the possibility that we do not take the lows and we come out and stop me out or just go up higher and we forget this and something insanely bullish happens. I think it's quite unlikely, but I want to prepare for the possibility. So I think what I do is if we are able to push up higher, maybe even like take a trend line here. Or I think, like I said, if we actually were to do this, then I would want a long down here. But I think I'm just going to let it ride. And right now I'm risking about $10,000 in open profit to make another possibly another $40,000. So the risk reward is no longer insanely good. And that's something about dynamic risk reward is as you get closer to your target, the risk reward becomes a lot less. I do expect some retracements inside of here though, like we should have some bounces. But now that we have these big gaps, I want this one to hold as resistance. We should have resistance here. Maybe we do, maybe we don't. Where people want to sell. I think it's possible I should advance my stop more actually and say if we even take these highs, then I might be interested in a short. Yeah, the moment we take one of these old range highs and if we get accepted back here, I want out. So I'm going to advance my stop even more to 23, 160. I wish I hadn't taken those two hedge longs. So I just hunted $3,000 for nothing. 1047. So my game plan is target here. Look for longs in here as on a reaction. If we get a really strong reaction in here, I could strongly consider closing my shorts. So let me put an alert right here. Alert. I say I don't want alerts, but there we go. And then I'm just trading Bitcoin right now, not ETH. Although, yeah, finally Bitcoin dominance. It was so annoying when I went short. This is where I went short. I had 1, 2, 3, 4, 5, 6, 7, so many hours of expansive Bitcoin dominance, watching everything else dump and nuke. But finally Bitcoin did. I was able to get out, move in my favor. So, okay, much love. Talk to you guys soon. Peace.